Okay, so the reason I recommend that we start with worksheet 8 is because then when you click these boxes, that then generates the appropriate forms. The 8965 is the form on which you claim your exemptions. So when you click the exemption box on the worksheet 8, it generates the 8965 in your tree. If your client has received an exemption through the marketplace, they should have their exemption certificate with them. The hope is, if they forgot to bring it, they'll be able to remember their healthcare.gov login. So that we could pull it up or check it in the tax site. If they don't have it, well then this is going to be an incomplete return until we do get it. Because as you'll notice here, we have to enter their exemption certificate number. When it comes from the marketplace, it will have that number on it. And there's no place else we can get that. And we can't file the return without it. Yes?
Well, last year when we did healthcare, if we screened someone and we knew that they were not going to meet the minimum guideline for income, we didn't do anything.
You didn't have to,
And so
because
then
some
what
exemptions are claimed on the tax return. Only some exemptions are claimed from the marketplace, and some can be claimed in both. So depending on what type of exemption it is, they may have a certificate, they may be required to get it from the marketplace. For people who are just now enrolling this year, or not enrolling, but if people know that they are exempt and they're applying for an exemption through the marketplace, but they haven't received their certificate yet, we can indicate pending in column C.
It's one thing.
Now,
When
I
the
don't
process-
know if they get anything as proof that they've applied for an exemption through the marketplace.
When we process the certificate right now, in 2015, you have a code for both years, 2014 and 2015. It's very specific, that code says 2014 code, 2015.
Right, so we're not
The
doing
ones that we are
2015
working
yet.
Now,
You're saying they get an exemption number?
exemption
A
code
certificate number?
for 2014 and also for 2015.
Yeah, but we're not doing 15 yet, so.
No,
But-
but
You're
the,
not, from a tax
for the,
perspective.
on the eligibility letters that we are doing right now, the ones that we do now, for the people who's below the 100% poverty level, they show an exemption code for 2014 taxes and also for 2015.
They could still get one, is what she's saying, for
So if they go right
2014
now, they
by,
will find a code.
So are you suggesting then that if somebody comes in who we know is under the poverty level, but still
Send it to the
file their
ICT
taxes
people.
because they'll get they'll get some EIC, for example.
Mhm.
You
Well,
should
the-
first
well,
send them the
the-
health.
No, the only reason we need to send them to healthcare.gov is if there's an exemption they want, that they're eligible for, that's only from the marketplace. So if they're below the filing threshold, they don't have to go to the marketplace to do that. They can do that on the tax return, which is where we're headed here eventually.
Okay.
But if there, there's something like 30 exemptions,
Right.
I believe.
And some of them you don't have to approve for you.
Some of them are only through the marketplace. It's only those that they'll have to have this exemption certificate number on.
ACA 5.
Now, the list of exemptions that can be claimed on the tax return are here in your handouts.
They're in the 4012 too.
Right, they're in the ACA tab of the 4012,
Page 5.
page 10 of your handout. exemptions have a code, and that code also is in your 4012. For those of you who have listened to the CBPP webinars, which are excellent, by the way, if you haven't, please try to break out time to do that. Those resources, the link to that is listed also here on the back. They're here in your handouts. Can't pull the page up right now. But those are all excellent. And their advice is to first try to find an exemption other than the insurance being unaffordable. That exemption is claimed on the tax return, but it is the more complex calculations. So look for other ones first. If there's no other exception that applies, then we'll need to address that one, obviously. And that could be the case with Charlotte. I don't know. I didn't go through the calculations to see if the premiums for her would have been greater than 8% of the household income. It could be. But we don't want to shortchange our clients, obviously, just because it's difficult to do. All right, so then part one of the 8965 is if your client has a marketplace generated exemption. If they don't have the certificate with them, you know, and because they didn't apply for an exemption through the marketplace, then you just ignore part one. So primarily what we're going to be, short of that, we're going to enter our exemptions down in part, oops, okay, but I have some questions first. And these are really important. 7A, are you claiming an exemption because your household income is below the filing threshold? So the filing threshold is in our 4012 on page A as in apple 1. Also, household income definition is on page 3 of the 5157. This is the little ACA supplement that is in your training package. It's got some good information in it also.
I also pulled a lot of the definitions that are relevant to this ACA section. They're the last 2 pages of your handout.
Right.
I pulled those directly from the CBPP webinars, so have a look at those too. Because some of the definitions, like there's like more than one definition of magi and various things, but I feel like those are pretty straightforward. Like this is what applies to exemptions and this is what applies to PTC, etc.
So, you know, we have to make all of this as complex as possible. Household income has a different definition for purposes of the exemption than it does for the premium tax credit. You would think magi is magi, but oh no. Oh no. But the primary difference is that for the exemption, household income does not include the non-taxable portion of Social Security. It is included in MAGI for the premium tax credit, which we're going to be talking about next. So household income here is AGI plus tax-free interest and foreign income. That the majority of our clients don't have. So for the most part, household income for our clients is going to be AGI of the primary and spouse plus MAGI of dependents on the return. Now, dependent income has to be included only if the dependents have a filing requirement. So if the dependent files a tax return just to get back their withholding, but they're below the threshold, we don't have to include that. It's only if they're required to file a return that the dependent income is included in household income. So in this scenario, the only income into the house is that of Spencer. And he is not below the filing threshold. So we're gonna check no to 7A. 7B is whether it's a hardship because the gross income is below the filing threshold. And Emily has included in the handout the definition of gross income, which is AGI plus any gross income on a Schedule C, so income without any business expenses, and any gain on Schedule D. So if there's a loss on Schedule D, you don't get to include that loss in calculating gross income. Only gain on the Schedule D. So for Spencer, 7B is also no. And then in part 3 is where we indicate the type of exemption that we're claiming for those who have an exemption in this household. And you'll remember that the girlfriend's daughter is the only one, I think, who had an exemption. And it was a short coverage
Yeah.
exemption. So you enter Eva's name, her social, which is, I don't know, 203.
204-34-7299. And the exemption means,
Here's a notice.
where's the notice? Yeah, it's a B. Uh-huh.
The number, somebody?
Yeah, it's a B,
B,
like a
okay.
Bravo.
All right, now you'll also remember that Eva had in her exemption for only the first 2 months of the year, right? So, Mom got her in CHIP in March. So actually, you're gonna check January and February. Those are the 2 exemption months. Those were the 2 months she had, no exemption.
We have 2 Novembers listed there.
Yeah, tax-wise has a mistake, they copied that comment.
I'll work it out. Sorry?
Was the system they used last year?
Yeah, yeah.
It wasn't around last
Oh,
year.
this
This
wasn't
is,
on,
this
this
is
is
all brand new, which is why,
They hadn't debugged it.
They're making updates though that will continue to roll out before tax season starts.
okay, so again, that Form 8965 is where exemptions are claimed. Exemptions to having to have health insurance during 2014.
Except, on the little page here, it says, check only the months where the person had no coverage and no exemption
That's on worksheet 8.
on worksheet 8.
We are on the 8965. Okay. Next, we go to the 8962, which is the reconciliation of the premium tax credit.
Sure.
And you'll see here that TaxWise has filled in a bunch of information for you. In order to receive in order to be eligible for the premium tax credit, someone has to has to buy insurance through the marketplace. And they also have to have income between 100% So while Emily's logging back in, I'm just gonna read to you some of the notes I've made along the way. So if anyone in the tax family buys insurance in the marketplace, then they have to complete Form 8962, even if otherwise they're not required to file. Catastrophic insurance plans are not eligible for the premium tax credit. So if you see, even though they may purchase their plan through the marketplace, if it's a catastrophic plan, they're not eligible. And if they receive PTC, they'll have to repay it. There is a cap on repayment of the premium tax credit, and the chart for that